Hello everyone, and welcome to your essential Metro Vancouver real estate market update. If you've been scanning the headlines lately, you might think the sky is falling. Reports are screaming about tunnel condo sales in a market in full retreat. But what if I told you the real story is far more intricate than those dramatic headlines suggest? What if this current moment isn't a collapse but a strategic opening? Beneath the surface of the numbers lies a fascinating shift in dynamics that city buyers and sellers absolutely need to understand to make their next move. Don't let the noise confuse you. Stick with me and I'll unpack the critical details that are shaping our market right now, revealing where the true opportunities lie and how you can capitalize on them. If you're considering buying or selling a property in Metro Vancouver, knowing these insights could make all the difference. So reach out to me directly after this video to discuss your unique situation. When we dig into the July report from Greater Vancouver Realtors, it's true, corner sales didn't just ease off. They actually led the entire market pullback, plummeting by nearly 18% compared to the previous month. The benchmark price for Condos also slipped once again, settling at approximately $688,000. Simultaneously, our total active inventory across Metro Vancouver now comfortably sits above 16,000 listings. To put that into perspective, that's almost 27% higher than our 10-year seasonal average for active listings. This creates what I call a classic one-step forward, one-step back pattern. On the one hand, casual buyers, speed by the headlines and uncertainty, tend to retreat to the sidelines. But on the other, serious strategic opportunities recognize this for what it is, a rare chance to move right in. Here's where the hidden setup truly lies. Many condo sellers listing their properties today are still emotionally attached to the peak prices we saw a few years ago, or they might have become overconfident during just short-lived spike in activity. However, with sales to active leasing ratios now sliding dangerously close to buyer market territory, a quiet but powerful force is taking hold: seller fatigue. Think about it. High carrying costs, municipal property taxes, rising strata fees, and the sheer burden of cash for a vacant or underperforming unit can be relentless. Inventory is visibly building up, and seller motivation is steadily but rapidly shifting from a let's test the market to a more ardent let's just get the thing sold. For strategic buyers who understand this dynamic, this quiet shift is pure gold. While everyone else waits around for lower interest rates or universally positive headlines, you have a rare open window to negotiate aggressive terms. Practically write any subject you need into your contract and potentially lock in prime real estate at prices that seemed utterly out of reach just a few years ago. To truly understand why condos took such a heavy hit, we need to look closer at the supply side of the equation. In July, new listings reached nearly 6,000 units, 5,970 to be precise, which marks a 3.2% increase year over year. This influx brought the total after leases in Metro Vancouver to over 14,300 homes. Critically, this means total inventory is nearly 23% above our 10-year seasonal average. When you pair the surging inventory with a slumping sales to active listings threshold, the key metric that dictates who actually holds the cards in a negotiation takes it. Overall, the market ratio for Metro Vancouver dropped to roughly 15%, moving firmly into balanced territory. But for the corner second specifically, it stepped straight towards buyer market territory, hovering below 12%. Nationally, price trends often lag behind this momentum, but they're already starting to reflect the significant shift. What's happening in real time is a massive shift in seller psychology. Owners who listed in June expecting quiet bidding wars are now sitting through the weeks of silence, watching their carrying costs pile up. That growing gap between a seller's entered after an outdated expectation and a buyer's newfound leverage is precisely where the best deals in the entire market are being made right now. On paper, when sellers pull back at the exact same rate as buyers, you get price stagnation. Benchmark prices might stay relatively flat, hiding the real friction underneath. But beneath that calm surface, the clock is ticking very differently for each side. For buyers, time is actually working in your favor. Yes, borrowing costs might still feel restrictive, but the overall inventory choice remains vastly better than during the panic buying years. You're no longer competing in multi-after blind offers every single weekend. You have room to breathe, to conduct proper due diligence, to even go subject to sale in some cases, and to negotiate standard protections without the fear of getting instantly outbid by someone else. For sellers, especially condo investors who bought near the peak with tight margins, time is a brutal opponent. Time is a brutal opponent. Sitting on your hands might sound reasonable in theory, but holding a vacant or cash flow negative unit in Metro Vancouver costs thousands of dollars every single month. Between mortgages hitting significantly higher rates, rising municipal property taxes, and increasing strata fees or levies, holding out for peak prices is a luxury that gets costlier by the day. Eventually, someone in a standoff has to blink. And in a high carrying cost environment, it is almost always the over-leveraged seller who breaks first. They might not drastically slash the public asking price on day one, but behind closed doors, they become remarkably open to aggressive counter-offers, flexible closing times, and standard concessions, just to stop the financial arm. This is precisely where the disconnect lives. While casual observers often look at sales volume and assume the market is completely frozen, experienced buyers recognize that low liquidity paired with high holding costs create hidden pressure points across every neighborhood in the city. Which brings us back to where we started: the condo owner about to list their unit today for peak prices. They are looking at the headline benchmarks, thinking everything is steady, completely unair. The buyer sentiment has shifted to total patience. If you know how to identify motivated sellers whose carrying costs are catching up with them, the standard isn't a dead market. It is, in fact, the single best negotiating setup in Greater Vancouver for over 10 years. Most market updates stop right around air. They throw out some sales numbers, a price number, and call it a day. But I'm not going to do that, because there's one ratio buried in the data that tells you far more about where prices are actually heading than any single month of sales figures ever could. It's called the sales to active listings threshold. In once you understand it, you'll never read a market update the same way again. Raw sales numbers only told you half the story. Hated listings told you the other half. The ratio represents the actual real-time tension between the two, measuring the pace at which inventory is being absorbed by buyers. Think of it like a battered turnless listings are the water from the faucet, and sales are the drain. If the drain is open but the faucet is just a trickle, urgency builds up very fast. The rule of thumb here comes straight from historical analysis that Greater Vancouver Realtors themselves publish. When that ratio drops below 12% and stays there for the sustained period, it tends to put downward pressure on prices. When it climbs above 20% and holds, it tends to push prices out. Anywhere in between, and you're essentially looking at a balanced market with no strong directional pull in either direction. Metro Vancouver's overall ratio for July came in at 13%, which is balanced. But let's break it down by property type it is. Detached homes are sitting around 10.9%, which is a slow-led buyer's market. Full stop. Townhouses and duplexes are at 15.8%, putting that segment in balanced territory but leaning slightly towards sellers. Condos are sitting right at 14%, which is also balanced. What this actually tells you is genuinely interesting, because detached homes are quietly the most buyer-favorable corner of this entire market right now, even though detached sales didn't drop nearly as hard as condo sales did. Meanwhile, duplexes and townhouses are functioning about as close to normal as a healthy real estate market as you're going to find anywhere in Vancouver at the moment. And let's look even closer at that condo number. Condo sales may have taken a significant hit recently, but because that ratio remains around 14%, it proves that owners aren't panic listing their properties. Inventory hasn't skyrocketed enough to completely overwhelm the reduced demand, keeping prices surprisingly steady across the board. For anyone currently navigating this complex landscape, this is the exact nuance you desperately need. We aren't seeing a crash. Rather, buyers and sellers are locked into a quiet standoff, waiting to see who blinks first. And if you're planning to make a move soon, this ratio is ultimately your absolute best compass. Now let's get into the number everyone actually clicked on this video for the MLS Home Price Index Composite Benchmark Price for residential properties in Metro Vancouver. It currently sits at $1,008,000. That's down 6.2% compared to July of last year and down almost 1% compared to just last month. But here's the context that matters, and it's important not to skip past it. Andrews was clear in the release that this isn't a market that's cratering. His exact framing was that with sales stuck in a holding pattern, there isn't significant price pressure showing up yet in either day. With prices down roughly 1% in July, that's a market drifting, not a market collapsing. Let's go through the property types individually, because the story is not identical across the board. Detached homes carry a benchmark price of just over $1.8 million right now. That's down 70% year-over-year and 1.1% from June alone, making detached the second, absorbing the biggest annual price dip of the three. Townhouses and duplex homes have a benchmark price of $1,003,000, down 6% year-over-year and down 1.5% just from June to July, which is actually the steepest single-month drop of any category this month. And apartments are sitting at a benchmark price of $688,000, as I mentioned, down 7.5% year-over-year, and down 1% just from the month before. That 7.5% figure is the largest annual price decline of any property type, and is landing on top of that nearly 18% collapse in sales volume we just talked about earlier. So here's the uncounted truth if you happen to own a condo in the city right now. Condos are getting squeezed from both directions at once. Sales down almost 18%. Prices down 7.5%. That combination makes condos the softest, most pressured corner of the entire Metro Vancouver market at this exact moment. But let's zoom out from the regional averages for a second and look at what's happening in individual submarkets, because the picture gets a lot more interesting and honestly a lot more useful if you're trying to make a real decision. West Vancouver detached homes carry a benchmark price of just under $2.9 million, down 8.7% year-over-year. Zoom out even further, in West Vancouver, detached prices are down a staggering 19.8% over the past 10 years on the price index. That's not a typo. It's not a 1 month. There's a full decade of West Vancouver detached values essentially going nowhere but down. Vancouver West condos are down 10.6% year-over-year and down only about 1% over the past 10 years on the index, meaning that specific segment has basically flatlined for a decade, while other parts of the region moved substantially. Now compare that to a place like Squamish, for example, where condos are up 99.4% over the past 10 years, or Maple Ridge, where apartments are up 96% over the same stretch. Some region, some news release, some headline number for the whole Metro Vancouver, but two completely different 10-year stories depending entirely on which neighborhood you're actually looking at. If all I pay attention to is a single composite number for Metro Vancouver as a whole, you are missing what's actually happening in your specific corner of the city, and that gap could be the difference between a good decision and a genuinely costly one. Now let's take a breath for a second, because I did promise you this ends somewhere positive, and all the three ran apart in 2021 and 2022, corrected through 2023, ran backward a little in a short-lived stretch in early 2024, and had been shallow drifted low after since. What we are living through right now is that some sheltered drifting lower phase of a cycle that has already repeated multiple times over just the last 5 years. This isn't new or unusual behavior for this market. It's the same rhythm showing up again. And if you zoom all the way out, Vancouver's residential average sale prices from 1977 through today tell an even clearer version of the same story. Detached average prices went from under $100,000 back in the late 70s to almost $12 million today. And yes, that's down from the 2022 peak, But look at the actual shape of that chart across 50 years. Every single correction on air, early 1981, 1924, 2008, 2012, 2018, looks absolutely terrifying war was happening. It looks like a brisk pause once you're standing 5 years on the other side of air. Historically speaking, what we are in right now looks a lot more like a path than a collapse. This is the part that actually matters, so let's talk about what this means depending on which side of the table you're sitting on. If you're a buyer, you have leverage in this market that you haven't had in years. Detached homes are sitting at the 10.5% sales to Updat leasing ratio, which is genuinely buy market territory, full stop. Inventory across the region is 26.8%. Outlook is 10 years seasonal average. Sunlights are motivated, and Condos specifically are down 18% in sales, with prices still landing on top of that. This is a real, honest window to negotiate hard, particularly on Condos and on detached properties outside of the very hottest micro markets. And don't wait around for the headline that says the market is officially back, because by the time that headline is this leverage will already be gone. If you're all seller, the most important thing you can do right now is price at the market you're actually in, not the market you remember from 2022. Duplexes and detached homes in the right neighborhoods are still moving at a reasonable pace, with townhouses down barely 1% year over year. The sellers who get stuck and sit on the market for months are almost always the ones who anchor to last year's numbers, priced realistically, and you shall selling into a market that closed over the 2,000 deals last month alone. And if you're an investor, this is one of those setups that looks like a warning sign on the surface, but reads very differently once you understand the history behind it. Corrections in every single dip in that 50-year chart eventually turn into a launching pad for the next run higher. Condos are currently the most beaten down asset class in the region, both in price and sales activity. And historically, that exact combination has often preceded the next upcycle rather than the start of a longer decline. The move here isn't to wait around for certainty, because certainty means the discount you're looking for has already disappeared. So no, Vancouver real estate did not fall off a cliff in July. It took a step back after a strong June, exactly the way the market has done before, and exactly the way the data itself suggests it typically does. The scary headline is real. The scary outcome isn't. Sure, we saw a roughly 10% drop in home sales last month compared to a year ago. The media loves to latch onto that 9.8% drop, trumpeting that we are hovering 18.6% below the 10-year seasonal average. But when you actually unpack the Greater Vancouver Realtor data, it tells a much calmer story. We're sitting on roughly 16,400 active listings, which is a healthy supply, giving buyers the breathing room they desperately need without crashing prices. The composite benchmark price barely nudged, dipping just 0.9% from June to sit around $1,188,000. That is not a crash, that is stabilization. It's the classic one step forward, one step back dance we've been tracing for years. June brought a surge of demand across all property types, and July just naturally took a breath, like it usually does. Sellers pulled back slightly, took a break, took properties off the market. New listings normalized straight on the 10-year average, and the market found its footing. So, if you're a buyer sitting on the sidelines waiting for a total market collapse, you are playing a losing game. Frankly, the fundamentals driving in summary, the Metro Vancouver real estate market in July saw a significant pullback in condo sales and a slight dip in overall benchmark prices, influenced by an increase in active listings. While highlights may suggest a collapse, a deeper log reveals shift towards balanced markets, with detached homes entering buyer-favorable territory. All library sales may have counted out. Seller fatigue due to high carrying costs is creating negotiation opportunities, particularly in the condo sector, which is currently the most pressured. Historical trends show that current conditions resemble a typical market path, not a long-term decline, making it a strategic time for buyers to leverage increased inventory and for sellers to price realistically. Investors should know that corrections often precede future growth. The market is stabilizing, not crashing, with resilient underlying fundamentals. No matter your position, understanding these nuanced dynamics is key to success. Don't navigate this complex market alone. Call or text me today if you're looking to buy or sell a property, and let's make your next real estate move a strategic and successful one.